everyone, and thank you for tuning into this month's Screener newsletter. My name is Callie Ochanicki, and I'm a member of the Customer Success team. Investors recently witnessed the 10-year Treasury rate dip below the 3-month Treasury rate, leaving shareholders nervous about a slowdown in the U.S. economy. The last time the U.S. saw an inverted yield curve was 2007. Potential federal fund rate hikes and uncertainty around Brexit have contributed to the recent inversion of the yield curve. However, not all hope is lost for shareholders. Investing in securities that do not follow market patterns lower the risk of declining portfolio when economic sentiment drops. Today we are jumping into the fund screener to create a universe of affordable U.S. funds that have historically performed well during periods of volatility. We will add some metric filters to examine stability and rank historical performance. Now let's get started. First, we're going to hover over Tools and click on Fund Screener. Next, let's modify the fund universe. Any modifications to the universe will be qualitative. If we click on Modify Fund Universe, we'll then click on Domicile and then choose United States. We will then modify the fund universe again and choose Attributes and then Open to New Investors. We are looking to add domestic funds that are open to new shareholders. Next, we're going to add some quantitative filters. I'm going to add a metric filter and utilize an equation. I'm going to use expense ratio, select the dropdown as less than, and insert 1. We want funds that will not carry fees that drastically impact net profitability. The next metric filter I'm going to add is years since inception and select the dropdown as greater than or equal to 15. I am particularly curious in companies that have been around since the last time the yield curve inverted. To piggyback off of this, I'm going to add in a metric filter. A 15-year correlation is less than 75. Funds that have lower correlation do not follow their respective benchmark, which may or may not follow the broad market. Our last metric filter is going to consist of a percentile. I'm going to use annualized 15-year total NAV returns with a focus on the top 10% with a higher value is better. Strong long-term rates of return demonstrate sustainability. I'm going to finish off today's screen by implementing some metric and info columns. Metric and info columns will not narrow down my universe, but rather add supplementary data to better enhance my story. The first metric column I will add is 15-year total return rank in category NAV. The fund with a rank closest to 1 will be the fund that best performed historically within the category. I will then sort this column to put our funds in numerical order, and we will see the funds that rank in first for their respective category. I'm going to add in some info column. If I select info column and search category name, we will see that each fund that ranked in first belongs to different categories. This makes sense as sectors such as consumer defensive and healthcare tend to do well regardless of the state of the economy. If you have any questions regarding the screen I've created today, feel free to reach out to your support contact for more information. Thank you all for watching, and stay tuned for further screener newsletters.